Hello and welcome everyone to the Commodity Report for the 3rd of February 2023, presented by myself, Phil Carr, at the Gold and Silver Club. The Fed have just given the markets the green light for the commodity super cycle. The only question you want to be asking yourself right now is, at what point are you going to end up FOMOing into the markets, as many market participants out there are currently massively underinvested to take advantage of the current commodity super cycle. On Wednesday through to Thursday, we've had back-to-back central bank news items, everything from the Federal Reserve to the Bank of England to the European Central Bank, causing a slingshot catapult higher for gold, silver, platinum, palladium and copper. Alongside that, energy's catching that bid on Thursday through to Friday as well. And again, this is one of the biggest opportunities for you to capitalize on. As you will recall, go back to our videos from last year. Throughout the final quarter, our mantra continued to be on gold: buy under 1,800 US dollars per ounce. We've seen gold this week break out back above 1,959 US dollars per ounce. In fact, it's moved over 20% from the last quarter through to January so far. Alongside that, we've seen lumber prices, they've surged over 30% this year. We've seen silver prices break back out to 9-month highs. We've seen platinum prices in the last 24 hours break out over 3%. You've got massive opportunities here across many industrial metals. We've also now seen energy prices, they rallied over 3% in the last 24 hours. So again, if you're finding right now you're getting chopped up a lot in the current market conditions, if you're using outdated technical analysis or gimmicky technical indicators, this is going to be the result. It's just going to be an absolute chop fest for you. You have to remember, many market participants coming into this year, they were expecting much more bearish market conditions. They've been expecting the recession to have a negative impact on the global equity markets, on commodities, on every single asset class out there. The exact opposite has happened here. So you have many traders and investors, they're completely underinvested in these current markets. And as a result, they've only got one of two options here. As the markets continue to accelerate higher, they've either just got to sit on the sidelines and watch many markets move against them, or they're going to have to finally capitulate and FOMO in. So the only question is, at what point in the cycle are they going to end up folding and getting in the market at much, much higher prices? This is one of the biggest opportunities here to get in at the beginning of the commodity super cycle, as Goldman Sachs, Bank of America, Citigroup, JP Morgan have all been advising their clients since last quarter of the massive opportunities that we've got ahead over 2023. And again, you've now got the Federal Reserve confirming and giving the markets the green light to continue this commodity super cycle over 2023. And you've already seen that in the last 24 hours, with gold prices breaking back above $1,950 per ounce. Ideally, you bought in below, of course, 1,800 US dollars per ounce, as we stated to you back in the month of December. Again, right now, you're seeing a lot of volatility off the back of the European Central Bank, the Bank of England, and also Friday, we have non-farm payrolls. So it's during that volatility, you want to take the opportunity as a trader to lock in those profits on the breakout and then reload where there's opportunities to get in at lower prices, very much like we've actually seen over the course of this week. With the constant volatility that we've seen on many industrial metals and energies, it affords you the opportunity to buy on those red days when the market is tanking. This is often some of the best opportunities to sniper in, getting mega low on some of these sell-offs that we've seen on multiple commodities, and take advantage of the surges that we see after the central bank news items. Again, this comes back down to understanding the cycles. So the daily, weekly, monthly, quarterly, real-time data-driven cycles for each commodity, so that you really understand how they move at different times of the year, the different cycles that each commodity moves, even down to the precision of the daily cycles that each commodity follows day to day, which helps you to get those sniper entries and also your exits at the right time as well, before you do get any major pullbacks on big volume that comes through the market. Alongside that, you also want to align your entries with how the commercials, hedge funds, money managers, banks and institutions are positioned in the market, targeting those key areas of liquidity. Further align that with the intermarket correlations in the market, utilizing the ratios in the market, especially trading those reversions to the mean. Alongside that, utilizing data, market intelligence, statistics, and further compound that as well with the narratives, the fundamentals, macroeconomics, and of course the capital flows in the market, which you finally align with how the commercials, the banks, institutions are positioned in the market in real time. That is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.